Good evening, everyone, and thank you for joining us. Like we said, I will just very quickly, I know we've asked this, but I want us to start. Before we go into it, can we just, in the chat section, I know we've been 2 years for everyone using Zoom, but it may still be a bit of a challenge, but I'm just going to launch a quick poll just to get a sense of where everyone is with financial modeling. So grateful if you can just, yep. Sorry, Charlotte, can you see the poll? Yep, okay.
I can see the poll, yeah. Hopefully everyone else can as well.
Okay, so yeah, just to get us started for today, I'll just give, yep, we have a few answers there. And then, okay. So I can see, I'm not sure if, sorry, I'm using this poll thing as a facilitator for the first time. So I don't know if you can see my screen or if I can share, but I'll just try to describe what I'm seeing here. And so far so good. 44%, I'd say they are not comfortable with financial modeling. Not at all comfortable, scary prospects. Yeah, so that's why we are here today. I will just leave that running and go back to the presentation. So today, what we're going to be, sorry, just one second. Yep, so start fundraising, selling your vision with numbers. Why we put together this topic was, I think, that realization, or that suspicion and not realization, from the past few months and years of experience with fundraising and modeling. Now, for a lot of people, like a friend told me, it just looks like Greek. It's just something incomprehensible. And what we hope to achieve with this session is to just try and break that down, make it less and demystify it, make it less scary. There are a couple of topics here. It looks like a lot, but we'll try and make it as as friendly and as possible. So this is a program. We'll do an introduction, talk about why you need a model, and a particular session I'm looking forward to is the audience part. Talking about the audience for financial modeling, with that particular part and storytelling. Why it's very interesting as well is you'll be hearing from Charlotte, who comes in with a different perspective from me, and maybe a closer perspective to the audience, which I suspect it's going to connect with a lot more, resonate with a lot more people. So very quickly, we'll talk about Sina, we'll talk about ourselves. Charlotte, do you want to go first and maybe just introduce yourself, and then I'll introduce myself and then talk about Sina?
Yes, my question is, can people see me? Because I can't see myself.
I can see you.
Okay, then I would assume that everyone else can see me as well. So yeah, I'm Charlotte. I'm the product marketing manager at Sina. I joined circa 5 months ago. Most of my career I spent in the world of startups, everything from video conferencing, scale-ups, to health tech, to deep tech. And last year I was an associate at Techstars. So that's an accelerator you might be aware of, where I work with 10 very early stage startups. Very exciting. And now I'm part of Sina, learning a lot about financial modeling for the first time myself. And yes, Kayode, please take the floor.
Thank you, Charlotte. I'm Kayode. I'm co-founder and CEO at Sina. I spent a couple of years in banking. A lot of that working with on Excel and working with financial models. I think this is part of. I experienced a lot of frustration. I was very good at it, but the question I always ask myself is, why do people have to spend so many years, so much money learning about, how to put together numbers? And for me, the question was, surely there has to be a better way. To cut a long story short, when I left banking after 14 years last year, I set up Sina, and the simple thing for me is, can we democratize this whole concept in investment banking, financial modeling, advisory, fundraising, meeting investors. There's just a lot of things. The way I see it is there are a lot of tools that big companies and very wealthy companies have that the man on the street, the small companies, small businesses don't. And for me, the driving force is, can we bring all those tools, all those resources, can we make it available? Can we bring it into the hands of small businesses. So far, so good. Over the past 8 months, we built a product. It's live. And the very first tool is an automated financial modeling platform where, good news, you don't need Excel. It's every single thing is a question. It's interactive. It's a very good UI. You're basically interacting with the system, learning, and at the end of the day, you get a financial model in less than 30 minutes. If I don't say that, I'll be in trouble with Charlotte. But yes, in less than 30 minutes, you can get a model. That's what our first, tool, our first version is. And we'll expand from there, as you see here, but I will not go into that. But yeah, that's my background, that's Charlotte's background, that's our business. Okay, when and why do you need a model? I think we heard from, I think it was Ben, who touched on this topic briefly, why you need a model. I think if he's talking about fundraising, about a pitch deck, that is one of the reasons. For most people, that is when they start to think of a model to say, I'm fundraising, time to build. The way I look at it is a bit different. I think for every business, or not even, I say every business, but in my life, I've been known to, build a spreadsheet or to effectively build a model for everything I'm getting into. From this story that I'm sure everybody knows, if you don't know where you're going, you will not know whether you're on the right path or not. So for me, a financial model is a tool which is a conversation with self to say, where am I going? How do I get there? So I look at it as a guide from day one of the business to the very end, you have a model. I'm sure a lot of you will be thinking, why do I need to build a complex financial model on day one before I have investors or when it's just me? We'll go into that, but in terms of when, I will say it's from when you're having a thought about any idea, put it down and write in, build a model. Charlotte, any comments in terms of when and where to build a model?
No, and Carla will go further into this, but it's so much more than just something you put into your pitch deck. You can use an operational tool, as a decision-making tool, and it's, as you say, it's a roadmap for yourself to know where you're going and how you will grow and how you will scale.
Okay, thank you, Charlotte. Okay, I'm just going to do another quick poll, and I hope this looks like the last one worked. I will just run another one. So the question, there are 3 models here. There's one on the top left, which is a scribbled one. There is a simple table, and then there is a bells and whistles one. If you could please take the poll, I hope it's showing again. Which of these will you consider the best financial model? Yeah, I see a couple of responses. Okay, majority of the, so if you've not, I think 8 out of 20, please continue to send me your responses. What I see so far is, okay, I shouldn't, while people are still responding, maybe I'll just give everyone maybe another 10 seconds, and then we could move on. Okay, I think most people have responded. If you haven't, pop in your responses, let's see what you think. But for me, I think most of the responses I've seen say all of the above, that they are all very good financial models. What I didn't see, I think if I recall from the answers, very few think that one on the top left is a good model. Something scribbled on what looks like a paper towel. But something like that actually represents what I think is a very, very good model. Day 1, day 0, basically picking up something and saying, I'm thinking of opening a pizza shop. What does it entail? I'm just putting it down and saying, okay, I need to sell. Okay, I've seen, yeah. And saying, I need, what does it, I see a few responses for scribble now. Just putting it down, and in 5 minutes, doing the calculations, and saying, I want to head out on this path. What does it entail? I need to, like you see from there, I need to pay tax, I need monthly rent, for a pizza shop. I need to hire someone, and just say, does it make sense? Can I embark on this? But yes, we consider all of these very good financial models. But what makes them different is a couple of things. One, it is what stage is your business? Two, who are you using who is your audience? What are you presenting model to? And I think the third thing is, what is your narrative? What story are you telling? If I take the first one in terms of, say, stage of business, let's consider that founder, who wants to start up on a pizza shop. I have seen it, and Charlotte can testify. I'll let Charlotte, tell the story. When speaking to people about how much it cost them to build a model, Charlotte, what was the longest time and the most expensive in terms of model that we've heard of?
Yeah, so a bit shocking, but 1 year and £10,000, and this was for early stage startup.
If you build a model and tell us in the chat, tell us how long it took, tell us what you spent, or if you built it yourself. But yes, that was what we heard from an early stage founder who spent £10,000 and a whole year to build a model. And the reason is this: a lot of people think a financial model has to be something very complex. It has to have all these tables, all these charts, all this detail. But what we see, from my experience, you actually need different types of models at different stages. A simple one when you're setting out, and then you increase in complexity as you go along. That said, even when you are advanced and you have complex models because you can afford it, depending on your audience, you also have to tailor what pick and choose, what you deliver. Charlotte will talk more about the audience. But yes, to summarize, every single thing you see here and more are financial models. But the form your model takes depends on, one, the stage of your business, two, who your audience is, and three, what your narrative is. So just to say that if there are any questions, please, I think there's also a Q&A tab. You can either, we could use that, and then we'll take that. We'll leave enough time at the end of the session. But if you have any questions on each section, please just pop in the Q&A tab. Okay. One more poll. I promise you we don't have a whole lot of this. But Charlotte, do you want to take the poll now, or do you want to do the intro to audience first?
We can just do the poll. I'm not able to do poll.
Okay, yes, I will do it.
You need to do it. You're the host.
So yeah, I think it was Ben. Sorry, forgive me if I'm getting names wrong, but I think the gentleman that spoke at first, Ben, talked about what he's looking for in this session to say, what do investors even want to see? What should go in the pitch deck? Let's look at this. What do investors look for in financial models? I see one response. Okay. Okay, I'm sure there's a way that I could share the poll results. Maybe we'll do that in the presentation later on, but I don't know. Sorry about that. I'm quite tech savvy, but not that much. So I'm just going to read it out. So far, so good with 19, 20 people responding. 5 said is accurate projection of growth and profitability. Just 3 said investors want to see granular details. And 60% or 19 people, 11 people say investors want to see basic understanding of business drivers. Charlotte, what do you think? Over to you.
Yeah, so I spent 2 years in a video conferencing company. I still can't get a grip of Zoom and all the nitty-gritties. But let's go over to talk a bit about audience. So unlike Coyote, with his analytical background from investment banking, I'm a marketer. So to me, financial modeling is quite Greek. And like many founders, I almost have the cold sweat when I hear the word spreadsheets or Excel. However, what I've realized is that there is many marketing concepts that applies to financial modeling too. So for example, I would say strongly that nailing your messaging is one of the most important things for you to kind of get your startup to succeed. And as with all messaging, it needs to be tailored to your audience. So your financial model helps you tell a story because it grounds your story in reality and supports with numbers. And how you present your financial model, it depends on who are you pitching to. So that doesn't mean that different audiences requires like a different model for each, but you should try to build a model that is flexible and can be tweaked, and also that you will highlight the things that matter most to your audience when you present it. So ahead of every presentation, try to kind of get a thorough understanding of your audience. Who are they? Who do they care about? And what do they want to see? So now I will go through some of the differences between presenting your financial model in front of an external audience versus an internal audience. And so let's start with investors. So, okay, I'm just going to please go to the next slide. So yeah.
Sorry, Charlotte, 1 second. I think I might just say comment that they can't see you. So I can't see Charlotte. Can everyone see her? Please. Okay. So, okay. Some can, some can't. Technology. Sorry about that, but I think it's nothing on our side. Some can see you, some can't. But okay. So just go ahead.
It is like 50-50 can see me. Okay. I'll just go ahead then.
Yes.
So I think I would guess most of you think of investors as your most important audience to see a financial model, and you're not wrong. They are the one that can help you realize your startup dream and support you through your journey. Financially, that is, not so much mentally, maybe. But what are they looking for? What do you want to hear? Well, there's no one-size-fits-all answer to this, but try to put yourself in the shoes of an investor. I will give you this money. How will you spend it to make sure I get return on investment? In the end, that's all I care about. So the aim of a financial model is to communicate your business strategy and your execution plan. It gives you an opportunity to show an investor how you plan to scale and how you will develop into a profitable venture. So be optimistic, but don't be unrealistic, because investors also use your financial model. I look at it to try to gauge your assumptions and your understanding of the market. And also, your story shouldn't be a pipe dream. It has to be grounded in some financial reality. So I would suggest, if you spend some time to try to get into the mind of your investors, you will save a lot of time, because then you won't have to go back and forth to revise your financial model over and over again. And you might ask yourself, how do you do this? Because investors they are human after all, so they will have individual preferences. And I would say, as with startup marketing, there is some experimentations, probably. So, of course, you can try some cold outreach, send them your pitch deck, but let's face it, investors are very busy people. So I would suggest do your own research. Follow them on social media. For example, Michael Rosenblum posted this on Twitter. The reason I like to look at financial models at an early stage is not to scrutinize numbers, but understand the main drivers of the business and to have a conversation with the founders about where they think the next year or two looks like. So while they have your answer, you're presenting to this guy, you know what he would care most about. Another thing you can do is, of course, you can reach out to companies in their portfolio. Like a friendly outreach and ask them, so how did you create your financial model? Or even people that didn't get funding, what did they do wrong? So use your network and be creative. The next one I want to talk about is the government. So yes. And I just want to ask you, are any of you applying to Say's race, or have any of you applied before?
Sorry, I've also just launched a quick poll
there. There is a poll.
Okay, so we just give, we have half have responded. We'll just give everyone else Maybe under 10, 20 seconds. Okay, so I guess we can go ahead. What I see here, the vast majority, about 80% have not applied at all, and they don't plan to, while about 20% plan to apply. So we'll just leave that running while you continue.
Got it. So I would say if you tick the boxes, there's no reason not to apply. It's a great scheme, but there is something with the sales nice that might surprise some of you, and that unlike investors, they want to see maybe want to see some of the hockey stick. Well, the HMRC want to see quite opposite. And the reason for this is that they offer investors a tax incentive, a tax break, to invest in risky businesses with a good idea. So for this not to become a tax avoidance scheme, they only support startups that most likely will fail without investor backing. And this is called the risk to capital condition, and it reads as following. There must be a significant risk that the investor stands to lose more money than they stand to gain as a return. So if your company proposition is so enticing that there really isn't any need for a tax break for investors, then you might have issues getting your grant approved. So in this particular situation, you might be better off creating two different financial models. So one more optimistic one for the investors and one more realistic, or call it pessimistic, for the sales. So the next thing I want to cover is your internal audiences. And this, at some point, you probably want to show or share your financial model with your internal stakeholders. So that is your team and your board members. And your team members, what do they care about? Most likely the things that impact them directly. So your hiring plan and your runway. Well, an experienced founder once said to me, the value of financial model is not just to please investors, but to tell you when you're going to go bust if you don't make money. Basically, when you're going to die. So it sounds very dire, but it's a hard truth. And you should be transparent about this with your team. And when it comes to the board of directors, it's about, do you adhere to the plan? And you want to see that you don't spend much more than you set out to, and that you kept what you promised. So you might realize now that, okay, you have one financial model, but the way you present it might differ if it's an external audience and an internal audience. And I think just to kind of round off, know your audience and tailor it to your audience. This marketing concept applies to everything, also financial modeling.
Thank you, Charlotte. Like I said, the audience bit, as with almost everything marketing, is something I've spent a lot of time in my founder journey on, which in my previous 14 years in banking, I didn't. Maybe just to share a bit of an approach, maybe Charlotte and I have used with something else, but which we apply to almost everything now. It's a kind of low impact. We rank either investors or audience, or in fact, let's put it so, we rank our audiences by impact. So for anything we're doing, either a message or a campaign or anything at all, any communication, we first of all test with a low impact audience, either our friends or people close to us, and say, here's this messaging, what do you think about it? And we then, from there on, we iterate, we change the messaging, pick what works, and then send out to the next high impact audience, and so on until we cover the entire audience. This is something that I think applies to, say, financial modeling for our fundraising as well. Because the question, Charlotte touched on that topic to say, how do you know what investors want? And within the investors, or within investors, for instance, there are different idiosyncrasies that one needs to understand. So I think it's that approach that we've used for everything, marketing, including financial modeling, that I would suggest as well. Test with an audience in that segment, maybe you don't know much about, see what they say and iterate. Okay, thank you, Charlotte. Now to maybe a bit of getting into the meat of the financial modeling topic. the key elements of a financial model and how they are connected. Just a question as well to the house. Do we have any accountants, any experience with numbers in the house? Anyone? Maybe in the chat? Let's see. Okay. So far, so good. Nobody. Okay. Here, there are three key elements that in my experience, that I grouped them. People will treat it differently, but I'll say there are three key elements of the broad topic of what we call financial model. The first is that that's the three-statement model that is a critical financial model. The profit and loss, balance sheet, and cash flow statements, which when they then come together in an Excel file can be very bulky, and for a lot of people, like Fukara said, it gives them PTSD. The second part of the financial modeling is metrics. And in very simple terms, it's what does the audience care about in terms of numbers. It could be profitability, it could be cash generation, top line growth. And within, say, profitability, there are different metrics for different businesses. We'll touch on that later on. But this is maybe one of my, in fact, all of them, I'll say I care about them equally. But the metrics are, literally at the end of the day, even if you build the first one, the financial statements, you must have like the metrics to say, this is, my output. Similar to that is the third one, the charts and graphs, which is visual. And human beings were very visual. We like to see charts, we like to see graphs, we like to see summaries. And I think this third part is also one very important output from the financial modeling process, or a third very important element of financial modeling. Okay, sorry. Okay. Let's look at, trying to break it down. Like I said earlier, one thing we want to achieve with this conversation, which with today and hopefully will continue, is to demystify this whole financial modeling thing, which looks like, it's something so complex. We've touched on those three different items or three elements of financial model. And the way I see it is there are three separate tools. They are connected. You may not be able to have one without the other. But for different purposes, for different audiences, for different narratives, you need to pick and choose. For instance, we have, I'll use Ben again, very early stage, starting a business and wants to have a conversation with investors. What I've seen people do is go out to build a complex financial model and have a very first meeting with an investor or with a stakeholder for that matter. I think that doesn't work. In my opinion, you need something very simple. You need not the three-statement model, but maybe the charts and the graphs and perhaps the metrics to say, over the next few months, or the next few years, this is how my customer numbers will grow. This is what my revenue will look like. And, maybe this is what my bottom line will be. Effectively just boiling everything down into like a very simple graphical representation. Fast forward maybe 5-6 years, Ben has grown the company, is grown rapidly, and is doing an IPO or is being bought out in a leveraged buyout. You then definitely need a full three-statement model with as many bells and whistles as possible. So in summary, for stage of your business, for the audience, realize that those three elements can stand, they're connected, or you can use them independent of each other. Okay, going into the three-statement model, which is like, the full thing. To start with is, my numbering is all mixed up here, but you get the idea. It's 1, 2, 3. The profit and loss statements, that flows from revenue. I'd like to divide it into two parts. It's effectively just the revenue and cost. If you think about it that way, that is all there is in a P&L statement. The revenue, how do you make money? You sell pizza shop. Let's assume Ben was starting a pizza shop, which I know is not what he was doing. But let's assume he started a pizza shop. Your revenue is just how many pizzas you sell multiplied by how much you sell them. No matter how complex your business is, it can be boiled down into just the volume and price. So that's, one key element of the profit and loss. You see advanced models and they have 10 lines just covering the revenue. It's fine, but I think all you need to understand, to start with, if one is starting from scratch, what you need to understand is simply what you want to sell by your price. And then all the costs, indirect costs, direct costs, taxes, depreciation, there are all types of costs that you remove from the revenue you've made to get to net income. The second element here, the balance sheet, is just unlike the P&L statement, which is maybe it covers a period, mostly a year or a month. Your balance sheet is a snapshot at a particular point in time. Say on December 31 or on October 31, how much cash did you have on the balance sheet? What were your assets? Do you have land? Do you have intangible assets? That deals with all those, all those, I'll say, I want to call them concrete things, but all those items at a particular point in time. It's related, we're talking about how they're connected. It's related to profit and loss because at the end of the day, when you have net income, you pay dividends, whatever is left goes into your retained earnings, your equity part of the balance sheet. So the balance sheet cannot do without the profit and loss. Same with the cash flow statement, which for a lot of people is maybe the most important because it talks about cash. There are three parts to that as well: cash from operations, cash from investments, and cash from financing. And that also connects to the profit and loss and the balance sheet through several elements. Talking about Excel, as most of the pain I've faced with Excel is from this part of the whole conversation, because there's a circularity involved. You have to turn on circularity, and one fits into the other, which then fits into what fed into it and goes down a rabbit hole. But we're going to that, but there are options to spreadsheets. Sorry, just a reminder, if there are any questions, please use the Q&A function. Very quickly here, I'll just touch on other modeling considerations. Some people do use accruals, which basically is recognizing revenue or cost when it is earned or spent, or versus the cash accounting basis, which only when cash is earned. But where some people combine them, for the cash flow statement, it's what actual cash has come in. But for the P&L balance sheet, it is using the accrual method. One other thing that people talk about, and it may sound complex, but it's actually quite simple, is maybe scenarios and sensitivity analysis. It's basically just putting different levers in different ways. If I sell 100 pizzas and I sell at 10 pounds, and then how many staff will I need to sell that? And you look at it that way. Or you say, okay, what if I sell only 10 pizzas in that same period, but price it as 50 pounds? But then the implication is that I need less staff. What is the result on what I care about, which is maybe net income? So it's this mix of, testing out different combinations that is called scenario analysis or sensitivity analysis. It may sound complex, but at the end of the day, it's just mixing. Just like as mixing both. And then we're talking about metrics. You have marketplace businesses which their own metrics, SaaS businesses with theirs, and e-commerce with total different set of metrics. Okay, let's look at assumptions. This also is, where I will say, we talk about storytelling. I consider this as the what of the entire story. Say, how does your financial model come together? And the way I tend to look at it is like building blocks. As an aside, Jenga is, I think a lot of people like Jenga. It comes from, I was looking it up before this meeting, and it comes from the word kujenga. Does anyone know the history or the origin of that word? If you do, please just pop it in the chat. But I think it's just some interesting insight I learned today about the origin of Jenga. So, but back to Jenga or building blocks and financial models. The way I want to look at it is financial modeling, complex term, but let's look at assumptions. No matter your business, you understand your assumptions. You know that in your control, they're in your power, and look at it that way. That your financial model is effectively a whole build-up of assumptions. Charlotte touched on this earlier on about what investors want, and we looked at it in the poll as well. There are just a few lines in a financial model that investors care about, and there are some of the building blocks. You won't know which is most important to you, or maybe those parts you want to emphasize as well. It's very important to bear that in mind, because at the end of the day, when you build a model, you're going to use it to tell a story. Okay, one question we've had a lot of is, I understand. A financial model is made up of assumptions, the building blocks for my model. Where on earth do I find those assumptions, and how do I know if they make sense? There are two broad approaches here. I would say top-down and bottoms-up. Top-down is basically just starting from the market. And Charlotte talked about consistency in storytelling. When you start with market, it's like, what are your assumptions about the market? Do you have a pitch deck or a business plan where you've done some research and you've talked about the market? That has to go into your financial model. They're not your business plan or pitch deck and financial model are not two different. They're not two different things. They're married. They're joined at the hip. One fits into the other. Your business plan fits into your financial model because it supplies some of the assumptions, and then your financial model then fits right back into your business plan. So for the top down, to pick your market assumptions from your business plan or from your research, and then you come down from there. Say, for instance, let's look at revenue. Say if the market is 10,000 people who eat pizzas every day, you make an assumption from how many of them live in your area, maybe 1 mile radius of your area. You make assumptions for how many of them will pass on the streets where you're opening your pizza shop. You go down from there and say, consider competition, how many shops are there? So if there are 100 people passing on the street and there are only 2 shops, okay, let's assume that I will take 30% because I'm new, and then I will grow that with time. And boom, you end up on your number of customers for the period, maybe a month. Multiply that by the price of you hope to sell your pizza. Maybe your competitor is selling at 10. You want to sell at maybe 12 because you're going to use premium ingredients, and you have your revenue. Exactly the same approach goes for costs. Comes from, in terms of top down, comes from market research. How much will it cost you to acquire a customer? How much will it take you to purchase the ingredients? How much will you spend on marketing? And then you have it all. That is the top-down approach, which comes from, I'll say, industry. Let's look at it as the topmost part of it all is the industry. And then at the end of the day, you have your inputs into your financial model. The other approach is bottoms up. And I dare say this is a bit more complex and a bit more tasking. But if we took the former, the same, let's use cost this time. If I wanted to say, okay, my marketing cost, in the top-down approach, I'll say, okay, maybe I'll use 1% of revenue as my marketing budget. By the way, this is a conversation I've had with Charlotte a couple of times about, say, what our marketing budget is. And we say, okay, what does it make sense in terms of we use one approach? What do people do? What do similar businesses spend on marketing? Okay, maybe it's 1% of revenue or 2% of revenue. Multiply that and say, okay, that should be our marketing budget for the year. A second approach, which we've embarked on, which takes lots more grit, lots more inputs, is the bottoms up to say, okay, let's look at how much has it cost us to acquire a customer in real life on our spending. Billboards, let's assume we have a billboard somewhere in many places across the UK, on social media, on different items. How much have we spent in a month? how many customers have we acquired, and by that simple ratio, you can understand what your customer acquisition cost is. Let's say it is £5 per customer, and then you say, okay, I will use that figure because that is a real figure. I will multiply that by the number of customers I want to get, and I know what my marketing budget should be for that particular item. What if you haven't, you started from scratch, you don't have data like that? It's also some research to say there's some standards in terms of conversion rates. And people use funnels a lot in marketing to say conversion rate from people who see your idea to people who buy, conversion rate from people who would come to your website to who sign up, people who sign up will pay. So there are also those conversion rates, which hopefully you can easily find it out by researching or by speaking to people who have done it before. That's that on those two approaches. In terms of how to use them, very simply, it's a combination. And there's no one size. There are times you need to use one approach, and then there are times you use the other one. But I think it's always very useful, either for revenue or for cost, to be aware of the two approaches. Okay, one other question we get, and I suspect we'll have, is, when you've done this mumbo jumbo of building up your assumptions, how do you know if they make sense? Very simply, if it makes sense to you, it makes sense. If you've done your homework, if you can present it very confidently, if it supports your narrative, then it makes sense. So the key thing there is just your narrative, doing your own work, and being extremely confident. And then your assumptions, they're only as good as how you tell the story. One other thing here is that the assumptions, or really the entire financial modeling process, is also not, you build a model and that's the end. It's actually an iterative process where you build a model, you share with an investor, or you build out your model, or you start building out your business, you update your assumptions, and you continue building. So we see it not really, we talk about it as a fundraising tool, but more importantly, it's an operational tool and it's a live document which keeps getting updated. It's a learning tool as well. Charlotte, you've done some work on the assumptions. Do you want to add anything to this?
Sorry.
Yeah, I was asking whether you want to add anything to assumptions and how they fit with storytelling at this point.
I will add it into the storytelling part, I think, which is coming up right away.
Okay. How to build your first financial model. I think we still have some time, so I want us to just try something here. There are two broad methods in terms of building a financial model. There is the do-it-yourself part where you download some templates. That's my assumption. Sorry, back to the start. My assumption is that early stage founder, and not a finance background, hasn't worked in consulting or fundraising, and we're going into business. And my understanding, there are millions of people like that. People download templates, and they then try to put in their own numbers and get out a financial model. A quick story there. Before I built Asena and I started automating this, I got a client who I was building models for people and then charging them a small fee. I got a call on a Thursday evening, and it was a friend who was running a fund, but he had downloaded a model for $100, I think. Sorry, he had downloaded, a model template for $100, but he had spent a couple of hours over the weekend trying to put in the numbers, but it just wasn't working right. Reached out to whoever he bought the template from, but they were gone, nowhere to be found. So I had to help him basically build from scratch. So that's something to be mindful of when you download templates. A better way probably is to learn it all by yourself, buy a book or learn, but that takes time. The other DIY approach is software tools, and that's where we talk about ourselves. That's where we come in. where we're trying to tell people there's a better way to building models, apart from just downloading. And what we hope to build out is something that is extremely flexible, that can cater to every type of business, but makes building models very easy. The other approach to DIY is outsourcing it, hiring a consultant. Charlotte gave a statistic the other day where we found a business owner would spend £10,000 on building a model. We see people do it. We see people hiring our CFOs even on day one just because they need a model and they can't get it done. Yeah, your approach depends on your personal situation, depends on budget, depends on background, etc. But our suggestion is to just give the software tools. I mean, honestly, there are software tools out there apart from Sina, competitors. I would say check us out, check out the competitors, but I believe that is the future. What I will try to do here, while we have a few minutes, is to just very quickly, do the experiment I said there. We talked about Googling financial modeling templates. I'm just going to do that and share my screen, and let's see what comes up. So, okay. For anyone who's on their own laptop can try this as well. But yeah, there are a lot of templates. I'm trying to see if I can find a template. Aha, these are the common things. Start financial model, let me see. Sorry, just trying to see, okay, very interesting. Okay, I'm just going to walk him up. Yeah, so we found a template. And yep, it's kind of works. It has all the information there that one probably has to spend some time reading up. This person has brought up, put up an Excel file, month on month. Charlotte, what do you think? If you got this template, what are you going to do with it?
No, again, it makes me cold sweat just looking at it. There's so many tabs, and I just thinking ref all the way.
Exactly. So, like I said, this is one approach. You download a template, they're out there. But what we will also very quickly show you is what we are trying to do with our software. Like I said, they're all options. And like life, at times you need different options. I'm just going to share my screen here now. So Charlotte, what's showing? Is it my login screen? Nothing?
Nothing.
Okay. You can try this on your systems as well. I'm just going to send, Charlotte, can you send okay, I'm just going to send this link in the chat. You can try it on your system either now or create an account. It may take time, but I'll just very quickly show you what our approach to financial modeling. This is one of the elements. Can you see my screen now? Yes. Start off with a dashboard. This is one of the elements we talked about earlier. Having charts, which you can very easily control and tweak as you like. But if you were starting from scratch and assuming no knowledge of financial modeling, totally new to it, no finance background, coming here fresh and new, our approach is to basically just take you through a user-friendly approach to it all. We've seen one approach with the financial model, with Excel and spreadsheet approach. Our approach is slightly different, effectively walking you through the process to say everything in plain English. What is your modeling currency? What is your start year? What's your projection period? And just Very simple. We have two approaches here. There's direct approach. There's the computer one, which we've only just launched. I will do the direct one to start with. But yeah, so this is the P&L, effectively like the key elements of the P&L we talked about earlier on. For some people, it's still, I've seen people who, despite what we've tried to simplify it, people still say, you know what, I still don't understand this. I still don't know how to build a model with this. What we've tried to do here is to build a kind of knowledge base helping funders there. So you'll see the abbreviations, but we've explained every single thing, and these are dynamic. We keep, we keep updating them. There are the tooltips there. Right here at the bottom is also, sorry. 1 second. Yeah, we also have a glossary and knowledge base where you can type, assuming I don't know what COGS is. I see COGS on my sheet here. I don't know what makes sense. I don't know what, I don't know what COGS means. All you need to do on our platform is come type it in here, and yeah, sorry, my internet seems to be slow. I hope, yeah. And you have glossary right there at your disposal, explaining what it's all about. And in fact, just trying to make it as user-friendly as possible and as helpful. We're also trying to introduce help, with human beings being able to say, being there on demand to be able to help people through. That has been our approach to building the platform. And for us, it's just making it, for a user, a different approach to it, starting with the user in mind and, talking about what makes sense. Charlotte, is there any part of, please stop me if there's any part of this you want to highlight?
No, just that I think this knowledge base is important. So you can go in and see the formulas, like what is typical benchmarks in your industry. So it kind of guides you through. And again, as you said, if there's something you need help with, we're always there to support. So we have a live chat. So trying to make it as simple as possible, so even me can create a financial model.
Yes. So I think, as a business, one thing we're proud of is Charlotte has created many financial models, which, I'm both say without our tool, she probably would not have been able to do. So on the input here is, basically just projecting forward. And we've also, the tooltips are there, the live chat and the glossary button is there just to help and break it down. And that is your financial modeling output. So this is how we've talked about, we say in 30 minutes, everyone should be able to build a model. But I'll say in that 30 minutes, we've built in a lot of fat into it, assuming that you still need to do some calculations or, as we introduce more complex models to our tool, it takes longer than maybe the 5 minutes it's taking me to build out here. But, this just explains some of those things I talked about in the presentation. You have your charts, which you can basically just copy and pop into your deck. You have your metric summary. We can see this business is growing at 50% in 1 year. The next year is growing at 100%. I see they're probably going to have a lot of very happy shareholders. And yeah, we can basically just see all the metrics there. And there's still a lot we'll be adding to it as we go along. But here, I dare say, it's a very, very simple financial model. As you see, there's no balance sheet or cash flow yet. And the reason we started out with this, two things. We talk about keeping things simple and not being complex. It's also just realizing, as Charlotte touched on earlier, that for very early stage founders, there are very few investors that will be looking into your balance sheet, wondering how, what your working capital is or, how much physical assets you have, because for most people, they have nothing. So, but the financial projections allows you to be able to have a conversation with an investor to say, this is my revenue in the following year, this is how it will grow, and this is how it will grow. On our platform, you can build several models. We don't have a functionality where you can compare directly, output directly, but you can build several models saying, assuming different, making different assumptions to effectively have a kind of scenario analysis. So while I'm on the platform, it's talking about training videos, a section for assumptions. Sorry, I just wanted to check some of the questions while I'm on the platform. The section for assumptions, yes, effectively right up here is projection assumptions. Right now, what we have is growth assumptions. So you have percentage. But I'm just going to try something which I don't know if it's going to work because it's one of our new features. But I'm going to start again now. Just answer that question in chat about the assumptions. That too. I'm going to go ahead and this. So this model here is a bit different from what we saw earlier. Here allows you to actually name what is this. Let's say this is pizza shop. So what simple, yeah. Well, I forget. Sorry if I've murdered the name of this pizza. Forgive me, but let's assume this is a product. Here now, for the next 2 years, I can basically put units sold. How many units am I going to sell per month? Maybe 100 I'll sell on average 100 per month in the first year. And let's say I will have grown a lot in the following year. I'm going to be able to sell 250 per month. We said 10, let's say adjust for inflation for the following year, and then you create it up. Here, so that is how the assumptions fit into a segment. You can effectively add another one and add so many other ones, have different assumptions, assuming that you don't sell that many, let's say it goes for, let's assume it goes for the same price, let's assume I don't increase that, and it fits into revenue. So to answer, I hope that answers questions about assumptions. Walter, I see a question about this for project finance. Not at the moment, I will say. Walter, my background is in investment banking. So I used to do LBO models. So I thought, we should be able to build that out very quickly. But what I've realized is it takes time. So we're going to scale it out. We have this very early stage model here, without maybe a business that doesn't have, that's just starting out. And then we'll do the early traction, the scale up. By the time we get to that scale up stage, we'll probably have a platform that can do project finance modeling. So I will go back to presentation. Sorry, I just want to take questions on the tool while I was on. So we still have some time, so we'll take the questions later on, but I'm just going to go back to the presentation. Sorry. Okay, sorry. Okay, Charlotte, over to you.
Yes, so by now, I hope you realize that your financial model is not just numbers on a spreadsheet. It's an operational tool, it's a decision-making tool, and it's a storytelling tool. So the financial model basically grounds your story and your assumptions in reality and supports it with numbers. It shows you how you will scale and grow, and it's a roadmap. And as such, your projections must be coherent with, I would say, your overall vision, your business model, and your strategy, so that you create kind of a red line throughout your whole presentation or pitch. And to round this off, I just want to repeat this. Getting funded is all about your ability to sell your story, and a good financial model will help you do that. And one more marketing concept to apply: keep it simple.
Okay, thank you. Okay. Sorry, just back to that storytelling. I think this cannot be overemphasized enough. There are two approaches that I've seen, that we've talked about, where people or founders or small business owners build their model and then, they show up at a presentation and say, okay, here's my model, where do we go from here? But the approach I am learning as well is to start from, say, understanding what is narrative, what is my key message. For instance, I am building a business that's going to grow to become a unicorn over the next 5 years. Somewhere in my pitch deck on my business plan, I will have put down to say this is a big market. I had a conversation with an investor who says the biggest challenge they see is when businesses or founders, they build a model, but which is not in tune with what they've said in the pitch deck or business plan. So a very good thing with a story, the big idea has to be consistent. The model is just a tool to tell that same story. So one thing I'm learning is to also just realize that a financial model is a tool to support a story and not a standalone document. Okay, and now, and here, we've talked about this in the concept of fundraising, but it was Walter who asked about project finance. My experience in project finance while working in banking is they actually almost literally worship financial models. So I kind of understand why Walter is asking that question. Let's take a project finance, a project that is going to go through project finance, say like an airport or a bridge. They'll literally spend, the very first thing they'll do is to just map out every single component over the next 20 years of the life of that project. And boil it down to a couple of very simple metrics. It could be most likely NPV or IRR. Sorry, excuse me. And the question they're trying to answer is, do we go ahead with this project or not? So for a go or no go decision, in project finance, they will have very, very detailed models. It's something that I have brought into my life as a founder as well. And I don't go through that whole detailed model to start with. I start with something scribbled to say, this business I'm going into, maybe a pizza shop. For it to make sense, I will need to sell, because I will need to pay rent, I'll need to do that, a few items. Let's summarize it, let's estimate. It means I'm going to have to sell maybe 100 pizzas a day at so. Does it make sense? You check it very quickly, maybe a 1 hour, 2 hour exercise with a bit of research and say, okay, it looks like it's possible if all these assumptions hold true. The point I'm trying to make is, it's not at the point, back to what we said at the beginning, it's not just at the point of fundraising, but before you even set out, scribble something on paper to say, what are the numbers? Did they make sense? Beyond that, as you grow your business from 0 to hopefully unicorns, remember someday we'll come out and say there are many unicorn founders from this room. Personally, for my business, I have a financial model by my side every single day. Shannon and I share, we share the calculations. Everything we're doing, at the end of every week, we revise what we know. Like I said, it's a learning tool. We have our assumptions on what it takes to acquire a customer. Every week, we take stock of what we did the past week. What did it cost us to acquire a customer? We update our financial model. So it's just, that's the way I use the model, and that's the way I've seen very successful companies use their financial models. Okay, that brings us to, I'll say, the end of the core part of this. We will still take questions. I'll just leave this slide on there because it has some very useful information. We want everyone to please try, the link. We'll put it in, we'll share it again in the chat. But when we share this deck, you can just click on the link. But what we've also done, I think in partnership with Tech Citizen, is to be able to offer everyone on this call a free premium subscription. It's NOV-MODEL. Put it on the, input that on the payment page, and you'll get your free 1 month subscription. I'll just leave that there while we take questions. Okay. Sorry, I'm just going to check Q&A. Okay, we don't have any questions in Q&A. If there's anyone who wants to speak, I'm sorry, I'm going to stop to share from. If anyone wants to speak, can you maybe just raise your hand and I will, allow you to talk. Sorry, I'm just trying to. Walter, would you like to, oh, okay, sorry, MK has a question. So MK, I'm going to allow you to be able to talk if you want to. Yes, I found you. MK, go ahead. Sorry, MK, if you unmute and ask a question, or do you want to type it? Okay, sorry. Osman, please, I missed your question. I see one where you're asking, is there a section for assumptions? Yeah, but I think we've answered that. Is there a question I'm missing, Osman? Oh, okay. Osman says, is this for tech companies only or other businesses? And definitely it's for every type of business, not just tech, tech businesses. I am a tech business owner, but I definitely, appreciate other businesses. And we built this out for every type of business.
So MK is asking, what if the startup is an exploratory stage? So I guess that's the ideation stage, right?
Yes. Yes, MK, definitely. I think what we have there, I will say, is most ideal for your stage of business at the exploratory stage. And so two things. In terms of approach to financial modeling or our platform, I would take the first one. Approach to financial modeling, like I said, it's to identify those maybe top 5, top 10 drivers of the business you're going into and saying how do they fit in. I'll use an example, back to that pizza shop example, to say if I'm exploring opening a pizza shop, I need to understand that, okay, I'm going to try. It's probably going to be rent, unless, and rent is a couple of options. I'm going to have a brick and mortar shop, or am I going to have a pop-up? If I can think of what the other drivers will be, it will be the cost of raw materials. I don't know how much it costs to buy flour and all that, but I'll need to find out if I'm opening a pizza shop. Cost of labor, and definitely how much I can sell my products. I'll say to identify those top maybe 5, but definitely not more than 10. I'll say ideally 5 drivers of the business and see how they fit into each other. For instance, if I think I can sell 10 pizzas a day versus if I'm going to plan to sell 100 a day, my rental cost and my staff costs are definitely going to be different. So I think it's those kind of interactions, it's not just a standalone, but interactions between drivers that are very important, even for an exploratory company.
I see that IRV's technology has reaches, probably not your name, but I see you can put up your hand. So maybe you could, I think you need to.
Okay, just. Okay. Everest, yes, go ahead, please.
Hello.
Hi.
Hi, can you hear me?
Yes.
I'll just keep this somewhat short, I suppose, since it's been recorded and there may be some other questions. I suppose if I have time, I would just say for like universally with like other businesses, best thing is just like networking, even from just like experience and stuff, and especially with Zoom. From Northern Ireland, we got like invited into like a Harvard alumni networking group. And we got talking to like venture capitalists from like San Francisco and that kind of stuff for like early startup companies. Yes, so I'm the founder and inventor of Urviz Technology Limited. Yes, or urviztechnologylimited.com. But yes, and it's just like very much just like even to the extent I was doing like a webinar last night. It was within Northern Ireland, and there was a guy who was talking about like a company that was the first to industry. and like how that actually like most first to industry don't succeed, and they actually brought it and succeed and thrived on it very much. And this is through like the early 90s within Northern Ireland, which was like a troublesome time, kind of pun intended. But yes, so it's just kind of just like it was just kind of that determination, and even to the extent they went like door to door, and they kind of just like that kind of just actually meeting and talking to people and just actually like interacting, the opportunities it can actually just bring.
Absolutely. Like, attend every event you can attend, because you meet fellow founders, you meet investors, you meet VCs, and as everyone knows, like, access can be hard, but it is also the most important thing to network and know the right people when it comes to startups.
Thank you very much. I see a couple of hands. Funkala, do you want to talk?
Yes. Can you hear me?
Yes.
Thank you both. This has been very insightful, and I will say that it's thank you for breaking the misconception that you only need like a model when you are speaking to investors, because that's what, if someone says, "Oh, do you need a financial model?" The first thing I'll say is, "Are you raising funds?" And my question now is, if I do go ahead to do a model just to sort of keep up with my business and check on my numbers every so often, what would you say ideally is like a good duration to keep on tweaking your model, checking your numbers? Is it like an annual thing? How people do audits, or is there like a stipulated or advisable period?
So just to be sure that I got a question, it's about your ongoing building a model for ongoing operational reasons. What's the period?
Yeah, the period to keep checking your model, like going back and changing your numbers and things like that.
I think I would say a couple of months out for you. I mean, for your own purposes, maybe a monthly model for 18 months. In fact, maybe 6 for startups or for business, depending on the life how old your business is. 6 months is a long time, but I think monthly model for 6 to 18 months can make sense. And then revisiting it. I mean, I would say I revisit my model at some point or the other every week, just update it with fresh information. But I suspect that for most businesses, after 12 months, they probably need a whole revamp of their entire model, and then maybe build out for another 18 months. So yeah, maybe build out 18 months at a time and review as often as you can, maybe weekly, maybe monthly, and then maybe every 12 months, refresh the entire model. Thank you, Funkala. Ben.
Yeah, hello again. Hi, a couple of questions. First question is, you mentioned about so this software service provides that kind of capability that we can add, so we can create a business model with some, of course, with some assumption, with some prior homework, if you like. So my question is, for the type of, because at the end, we need to put some numbers down in certain fields, and those numbers requires us to work out some numbers. So do you have any like examples in your platform, or like how we can get this stuff, or do we need to like do, I mean, outside investigation about each of these, not term, but how we can get them? Let's say sale number, things like that. So basically, we're going to assume some stuff, but then is there any like example in your platform? That's the first question. Second question is, when we go and pitch our model to investor, possibly the investor going to come with like they, of course, many of them, they're going to challenge this model, say no, we don't accept it. Of course, it's really important how you sell your story and sell your vision, but sometimes you get 2 or 3 of them, they're going to say the same thing. So my question is, are we going to stick to whatever we assume, just on debate and just on the polish up our story, or change our model based on what the feedback we get from investors?
Okay. Maybe just to take the first one. I mean, I'm going to summarize just to be sure I got you right. You're asking, showing the platform and the templates. There are places where you put in. Your question was around getting what the inputs. That's right. Where do you get it from?
Yes. So like, I understand you mentioned about like a strategy into top to bottom, bottom to top, marketing research, understanding and everything. Of course, we need to understand our startup well, but at the same time, there are this. Sometimes my job is I'm a developer and I'm a technical guy, and then when I try to see this in a financial way, I sometimes struggle to translate some subjective stuff into the like a financial stuff. So, but possibly there's a few examples, but I'm guessing I can Google it so I can find out. So that's a different thing. But that's my question is: do you have anything in your platform like examples and like that, just explain about different scenarios, or just only there aren't any?
But I think I get you completely in terms of, I think that whole assumption piece is, I'll say, is the most difficult because your two questions are related. Like, for instance, if you've found a couple of numbers from somewhere, either from bottoms up or top down, and then you go to investors and they challenge them and you feel bad or you lose the opportunity. In terms of our platform, we're not there yet, but it's something we've identified. And we want to be able to help people to say, for instance, we have to even give you a prompt to say in your industry, say, for instance, the way we've conceptualized this is if you put in, say, revenue figures for over the next 5 years, for our system to suggest to you to say that is within range or outside the range for your industry. We don't have that yet. So honestly, I think the only way is to maybe speaking to a consultant to say, or an advisor, or somebody who's gone ahead. That's what I try to do. I think Evie's talked about networking earlier. I just ask someone who's built some type of, even if it's an adjacent business, to say, does this make sense? Sense check these assumptions for me. But I get you completely, and please don't even think it is a unique challenge you have. For a lot of people, those assumptions are the toughest part of it, and it's tough. The second question on, when people challenge your model, I would personally use it as a learning experience. To the extent I'll be open to everything that comes in, but it will be my call on what makes sense. There will probably be the whole gamut from senseless comments on your model from whoever, to comments that can actually improve your projections and improve your understanding of the business and can add value. So I think for every funder, for every business person, you are best placed to be able to sift and say, this I will take, this I will throw away. But my approach will be, what Charlotte and I talked about earlier on, say low impact, and present someone and say, what do you think? From your knowledge of the business, what do you think? Use it as a learning opportunity. But then at the end of the day, depending on the type of industry, there may just be a point where the feedback you'll get from maybe even investors, some of it is probably just going to be crap and you have to stand your ground, but some of it will be useful and you need to take that call.
I see that.
Thank you.
Sorry, thank you so much for your question, Ben. I just saw that Bisayo, you wanted to say something. I think you raised your hand for quite a while, so just going to let you. And also, Walter, I see you have a question in chat. We'll take that after.
Okay. Sorry, how are you doing?
Yeah, sorry, that must have been, I was just, I didn't raise up my hand, but I'm fine about following. Totally, Charlotte, thank you. I did have a question, but I don't think I want to ask at this stage because it's been answered. So it was related to one of the questions that came up early, and that's pretty much looking at the ambiguous things that are done. How do you estimate those values? Pretty similar to what's just been answered. So yeah, I think that's fine. Thank you.
Coyote, did you freeze, or seems like your picture froze? Or is it just me?